Hey everyone, welcome back to the Investing Iguana channel. In today's video, I'm going to talk about a very interesting topic, Singapore Treasury Bills, or T-bills for short. These are short-term government securities that you can invest in with as little as 1,000 Singapore dollars. But there's a catch, you should only apply for them on the last day of the auction. Why? Well, keep watching and I'll explain everything. But before we get into that, let me give you a quick overview of what T-bills are and how they work. According to the Monetary Authority of Singapore, MAS, T-bills are issued at a discount to their face value and mature at their face value. That means you pay less than what you get back at maturity. The difference is your interest income. For example, let's say you buy a 10,000 Singapore dollars T-bill at 9,800 Singapore dollars. That means you pay 9,800 Singapore dollar upfront and receive 10,000 Singapore dollars at maturity. The difference of 200 Singapore dollars is your interest income. The interest rate is determined by the market demand and supply of the T-bills. The government issues two types of T-bills, 6-month and 1-year T-bills. They are issued quarterly according to the issuance calendar. You can buy them through DBS/POSB, OCBC, and UOB ATMs or internet banking. You can also use your CPF ordinary account, OA, or supplementary retirement scheme, SRS, funds to buy them. T-bills are considered very safe investments because they are backed by the Singapore government, which has a AAA credit rating. They are also tax-exempt for individuals. However, they are not risk-free. The price of T-bills may fluctuate before maturity depending on the market conditions. If you sell them before maturity, you may incur a loss. So why would you want to invest in T-bills? Well, there are three main reasons: to diversify your portfolio with a low-risk asset class, to earn a fixed interest income at maturity, and to park your excess cash for a short period of time. However, T-bills are not suitable for everyone. If you need liquidity or flexibility, you may want to consider other options such as Singapore Savings Bonds, SSBs, or fixed deposits. If you want higher returns, you may want to look at other types of bonds or stocks. Now that you have a basic understanding of what T-bills are and how they work, let's get to the main point of this video, why you should only apply for them on the last day of the auction. The reason is simple: to avoid overpaying for them. You see, when you apply for T-bills, you don't know the exact price or yield that you will get until after the auction closes. The auction is conducted using a uniform price method, which means that all successful bidders will pay the same price regardless of their bid price. However, the final price is determined by the cutoff yield, which is the highest yield accepted by the issuer. The cutoff yield depends on the total amount applied by all bidders and the amount available for sale by the issuer. The problem is that the cutoff yield is not known until after the auction closes. So if you apply early, you may end up paying more than what you need to. For example, let's say you apply for a 10,000 Singapore dollars 6-month T-bill on the first day of the auction with a bid yield of 4%. That means you are willing to pay 9,800 Singapore dollars for it. However, if the cutoff yield turns out to be 3% at the end of the auction, that means you could have paid only 9,850 Singapore dollars for it. You overpaid by 50 Singapore dollars. On the other hand, if you apply on the last day of the auction with a bid yield of 3%, you will pay exactly 9,850 Singapore dollars for it. You saved 50 Singapore dollars. Of course, this is just an illustration and there is no guarantee that applying on the last day will always give you a better price. Sometimes, the cutoff yield may be higher than your bid yield and you may not get any T-bills at all. But the point is that applying on the last day gives you more information and flexibility to adjust your bid yield according to the market conditions. Another benefit of applying on the last day is that you can avoid locking up your funds for too long. When you apply for T-bills, your funds will be debited from your account on the next business day after the auction closes. That means if you apply on the first day of the auction, your funds will be locked up for about a week before you receive your T-bills. If you apply on the last day, your funds will be locked up for only 1 day. This may not seem like a big deal, but it can make a difference if you have other investment opportunities or cash flow needs during that period. You don't want to miss out on a better deal or incur unnecessary fees because your money is tied up in T-bills. So there you have it, the reason why you should only apply for T-bills on the last day of the auction. I hope you found this video helpful and informative. And that's it for today's video. I hope you learned something new and useful today. If you enjoyed this video and want to stay updated on the latest investing trends, tips, and expert advice, make sure to hit that like button and subscribe to the Investing Iguana. We're constantly working on new content to help you navigate the world of investments with confidence. And don't forget to hit the notification bell so you never miss any of our videos. If you have any questions or suggestions for future topics, feel free to drop a comment below. We love hearing from our audience. Thank you so much for joining us today, and we'll see you in the next episode. Until then, keep investing wisely and growing your wealth. This is the Investing Iguana, signing off.